Welcome everybody, Jack Kellogg here. Got my August 2020 in the books for $94,700 in profits. Really good month for me. Didn't take too much risk and was just shy of making six figures in a month. So I'm pretty happy with my trading and execution. Average loss of $351. And my average gain was 1,370. So I'm trading with that high risk to reward ratio. Biggest loss 1,300, which is smaller than my average gain. So you'd love to see that. And my biggest profit was just under 34 grand, making up around 1/3, a little bit less of my total month. So still 2/3 of my gains came from showing up every day and executing on low risk, high return trades. Overnight fees and borrow fees on the lower side compared to the previous 2 months of June and July, where I was spending 3K and 4K. So as you can see, just not trading as much, had less trades overall. And other than that, my 2 red days, very minimal, where I just didn't see too many things. Maybe I took a few trades and it just resulted in break even. But none of these days I was really down. Actually, on this day, the 25th, there was another runner, GP VRF or something like that, but recently changed tickers to GP. That was on a multi-day OTC run, and I ended up shorting it at the open, and that was my previous best trade of the month, where I think I locked in around 9,000 in the first 15 minutes, and then it came back, and I shorted the bounce before getting squeezed and losing around half of the profits that I made on that. So that was a pretty big mistake that you couldn't see on paper. But other than that, really wasn't getting too upset with anything else. To get into my monthly review now, Lcdx, my best trade of 34 grand with a 66% return, and that was just in a few hours. And I will explain this trade in detail. And it was just like a ticker last year that I'll get into, but you really don't see these kind of opportunities often. And I feel like I talk about short trades all the time on my monthly review, so I'm going to try to go over some longs. ALYI was actually my second best trade, and it was a long. And then I'll go over my RLFTF long here, and that's about it. GLDLF was also just like RLFTF, nearly the same exact trade and thesis. And here are my stats on the right side. OTC, trading about 75%. Last 3 months have been very OTC dominant. There hasn't been too many NASDAQs runners ever since the COVID stocks started to create their daily backsides and sell off. There really hasn't been too many multi-day runners, which is okay because OTC has still been good. And that's what's great about being a versatile trader is if one strategy isn't super hot, there's always another strategy out there that is likely working. You just need to be adaptable to the market. And what helps you be adaptable is tracking your trades day in and day out and analyzing your stats of what patterns are performing the best. I'm not a big believer in tracking the data of how the stock plays out throughout the day. I'm more of a believer in tracking your own performance based on the patterns. But of course, if you are new, it could really help to just track the data of the stocks and then kind of see if you can develop an edge within that. But then it all comes down to you. if you're not good at the pattern, then it might just not be for you. For example, if you want to get up pre-market and short PRs on NASDAQs and these gappers, if you're on the West Coast, that's probably going to be very difficult because you have to be getting up super early at 3, 4, 5 a.m. to get there for early pre-market, get your locates, do all that. And that could be really tough because you're groggy in the morning, every night, or every morning, something like that. So it really all just depends on your situation. For me, I like OTCs because they trade smoother in my opinion. So for me, that's kind of where I stick with. If OTCs are hot, I'd rather be trading them than NASDAQs. But if there's no OTCs, I will adapt and trade NASDAQ. My long win percent with a 61 and my short with a 73, which is a little bit higher than normal, and my overall win percent with a 65.6, a couple percent higher than usual. And that is just simply because I took less trades. I went out there not expecting to make too much this month, just remembering based on last year, there wasn't too many trades last year. In August, I think, was probably the slowest month of the year. So I kind of went in expecting that it was going to be slow. And this month to start, it is September 7th. It is Labor Day. It's a Monday. The market's off. I went into September kind of expecting for it to be hot. And so far, I've taken a lot of trades and I haven't really gotten too far. And I've had to deal with a lot of frustration because I'm expecting for it to be hot. I'm coming off the 57 grand week and I want to keep on pushing and pushing. But if I just took the approach that I did in August where I was just simply trading and I was waiting, and then when the A+ opportunity came, I was able to capitalize on it with very little stress. I don't think I was down on this position at all. I went short and it basically just went straight down. And I was just waiting for it to come to me. I wasn't forcing the trade, where this month in September so far, I was forcing it a little bit. So it's good for me to review this month and kind of see that I was just hitting all these singles. And then once it got hot, then I'm sizing up here towards the end of the month once I'm seeing the ideal plays. And all it takes is a week to make your month. And you obviously know when your setups are hot because there's just so many stocks that you start missing so many because there's so many things to trade. But when you go looking for trades, that's probably when it's slow. So my average winning R, like I was saying, my risk to reward ratio was great, coming in almost at a 4.4x my average loss. And my profit factor with a 7.43, making 7.5 times my money that I put up to risk and I lost. So really, really good stats. And now we can get into some trades. I will probably briefly go over Lcdx here. So Lcdx was an OTC that really didn't have much chart history. Trading as low as 25 cents here back last year. Gave back all of its gains here when it ran all the way from $1 back down to 50 cents. So I first started trading it this day. Or actually, no, I traded it this day. First got on my radar this day when I had the big green candle, and I ended up going short this day from the 120s down to 80 cents for a nice gain. And then I kind of lost track of it because there was other things that I was trading. But, you know, the wicks here, there was a buyer, started kind of going up a little bit. And then it came back on my radar this day when I was breaking out. And I considered it as a long trade as it was breaking this $2 level. But it was restricted at a lot of brokerages, and you couldn't trade it. Especially for me at my E-Trade broker, you actually had to call in the order. So that just makes it a little more sketchy to me. And then as it keeps going, now it's becoming a very high watch this day, because now we're up from the mid ones, now we're up to the threes. So I'm getting really excited for this short. And I wasn't expecting this. I was expecting maybe a pullback to $2 from 3. I thought I could make about $1 a share once it went red, once it was having its first red day. But we kind of gapped up this day, which was surprising to me. I thought we were actually going to gap down after this big wick candle. Kind of reminded me of this candle with the same kind of wick, and it was a third green day. And you see a lot of these have a first red day after 3 green days. But surprisingly, we gapped up and we went parabolic all the way to 640. And that's when I got really interested in this stock. So let's dive into a 15-day 5-minute chart. So this was the day went parabolic all the way from 380 to 640. And this was when I was trading GPRVF, and I wasn't really watching it too much because I knew that it was very bullish. I didn't want to short. But once it started going sideways here, as you can see, it was making this tight range. I got interested in potentially shorting this if it cracked to the downside, because it had a clear, tight risk to reward stop loss level where I could short this support crack and risk the top of this channel. So that was kind of my idea. So I was watching it up on my screen, and then all of a sudden, OTC Markets alerted me to getting a caveat emptor, which I'll explain in 1 minute here. So here is the caveat emptor policy. This basically means to me that the stock is getting flagged for fraud, right? Here we go. We got promotion, investigation of fraud or other criminal activities, suspension or halt is possible, undisclosed corporate actions, and it basically just means that this stock is very scammy. And I saw that notification go off as it was cracking support, and I was planning only to short maybe a few thousand shares and then add if it starts working. But once that came out, I changed my plan, and I got short at 535 with 10,000 shares. And I was risking this 545 level. So I was risking about 1,000 on this trade. And all of a sudden, it snaps. And now it's showing me it's really starting to work because people are starting to see the news. And it's very rare for the CE to come out in the middle of a day. So the CE came out in the middle of the day, and a lot of brokerages also restricted people from buying the stock because it came out with fraud, and brokers don't want you buying stocks that are fraudulent. So only people could sell. And actually, I got really lucky with my broker because they were not letting me trade it. No route was accepting my orders. But when I went to short here, a route was working, fortunately for me. And then, 30 minutes later, I couldn't cover because there was no routes working again, which was fine with me because my plan was to swing this, and I could always call in my orders. So it really started working and really started crashing as it went green to red here. I was already up pretty much 20K as we're going red here, and just absolutely insane downside all the way down to $1. I actually covered a little bit too early. I covered at $1.80 just because it was down so much, and I really didn't want to sit through a big bounce all the way up into the threes. But on my best trades, I always usually leave profits on the table because on my big trades, I'm really right, and it's hard to capitalize on all of the move. And also, one more thing that I want to note was this $3 level was almost like the same kind of neutralization price action where it's just going sideways. And then once it breaks that level, we get that huge move. So when it starts going sideways here, I can kind of compare it to this action right here. And once it chose its range or its price action that it was going to perk to the upside, we got that massive follow through. So once this chose that it was going to have a support crack to the downside, I also expected for it to be a pretty big move. And with it getting the CE, that even adds more conviction to my trade thesis. And that's why this was very rare. This isn't going to happen every day. But fortunate for me, I was ready, I was prepared, and I was one of the few traders who capitalized on this amazing opportunity to short sell. Now to get into ALYI. This was one of my best long trades in a while. Made almost $7,000 on it. It was a penny stock trading at 2 cents. So we'll pull up a chart here. ALYI. Let me just correct this here. Sorry, guys. But Thinkorswim sometimes does that. Funky prints. But this was a stock I was watching for a while because it was a massive runner last year where it had this 3 cent breakout and went all the way up to 7 in one day. And with massive volume back then, 80 million shares was a lot. Now that's nothing. But this was a great breakout and one of my best trades last year, so I remember the ticker. And, it faded all the way back down. And then it started popping up again as I started putting out press releases of electric vehicle press releases. Didn't really read too much into it, but all I knew was that they were trying to pump it with electric vehicle sector, trying to get some momentum off of Tesla. And I actually bought it this day here and added into the breakout when it gapped up this day over this 1.9 level. And I took a loss. And I kind of was a little bit frustrated because I felt like this should have worked. This daily is very intact. It was in a hot sector. It had a press release, and it just failed. So I took my loss and I moved on, but I was keeping it on watch because I knew the sector was hot. And as it was kind of consolidating near the lows, I was kind of confused this day here when the big volume did come in because it was so far near its lows. But if we pull up a 15-day 5-minute chart again, we can see that massive volume came in to this stock, and it immediately popped on my radar. As you can see here, 50 million shares almost in 15 minutes, which is just an absurd amount of volume. So for me, as long as it could consolidate under that 2 cent breakout level for long enough, I would be interested in going long again. So it dipped and was holding midday here. I wasn't getting involved, but once we kind of broke this downtrend right here, once we broke this downtrend, I got long some shares into this 1.8. And I wanted to make sure that I wasn't just adding into strength randomly. So I made sure to always be adding on dips. So I was adding on the dip here. I was adding on the dip. And I kind of started in my risk based on this 1.6. But as we keep holding here and it's going later into the afternoon, I moved my risk up a bit to the 1.7s. And then once we got that breakout over 2 cents here, I added in a bunch more. And then I just sold along the way. I sold some into the 2.2s just because I had taken a lot of size, and if it did dip back down, I didn't want to be selling there. I'd rather sit through a dip, so I was selling some into the pops up here. And then we got this huge speed up candle kind of randomly here from 2.2 to 2.5. So I kind of took that as, okay, that's probably the speed up. And unfortunately, I sold all of my shares into this 2.5, which is still great from 1.8 to 2.5 as my best buy and sell. But the stock ended up continuing all the way to 5.8. So I left, I don't even know how much, probably about 40 grand on the table if I had perfect execution with the size that I was trading. But that wasn't really my plan. My plan was to sell into that speed up, and this was that speed up for me. And I should have considered potentially rebuying it down into the support level, into the close, because it didn't truly have that parabolic move, and it was a hot sector closing near its highs. But all I could remember was last time that it dumped after the big breakout day, and we were up almost 100%, 100, even more than 100%, 150, I think, percent. So I didn't want to swing overnight, but I did end up leaving a lot on the table. I did not really trade it too much this day. I think I bought some dips on the backside just for some scalps, but hopefully I can do better next time. My thesis was there. It was one of the best OTC breakouts of the year, in my opinion, because of the massive volume and the hot sector and the whole cent or 2 cent, the whole breakout. It wasn't a random number. It was, a double top, and we had created a nice support level on a press release. So it basically had all the things that I look for when I want to buy an OTC breakout. And this is great for small accounts where you can really see, massive gains if you're buying it down here in 1.8 to 2 cents and you're selling it up in the 4s here, into this morning spike or this morning spike. Maybe you last till 6, and that would just be a phenomenal 200% gain over 6-7 hours of market time. RLFTF is another one that I wanted to talk about here. A long trade for 2000, and this has been a great OTC, up from 5 cents at 95, and it's still holding its gains very nicely here, kind of creating this wedge on the daily. So I'm definitely still watching it too as well. We'll just have to see which way it decides to perk, but it's a little tricky because this stock trades in Switzerland, so that's why you see these gaps are so crazy to both sides. But after this massive run here, I was watching it for the first red day, and unfortunately there is no routes working to short it for the first red day, so I was watching it for the dip buy. And now I will pull up probably a 30-day chart, 5-minute. So this was the first red day after the big day, right? This was the day it went to 95. This is the first red day right here. And basically how I played this was not as an OTC panic dip buy where you see red, 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 and then the green and the bounce. As you can see, this was red, sideways, more drop, and then I started getting interested in it, dip buying it around this 50 to 60 area, and I actually took my first entry around here in the 56, 57, 58, and I ended up selling into this 62 pop. It just didn't bounce as high as I thought, so I thought it potentially could go lower, and that's what happened. It went lower, and this dip buy, I mean, the thesis is simple. If you guys look at the previous day support at 55 of how well it held, it was a top here, bottom, bottom, bottom. And now since we're down from 80 to 55 in the first hour and a half, I'm going to treat it as the Mark Crook dip buy on former runners, where he likes to dip buy around 11 o'clock and he looks for a bounce to VWAP. So that was my thought process on it. And I ended up getting long, maybe like 30,000 shares at 55. And I ended up getting a really nice pop all the way to 65. And I just ended up selling my shares all along the way because I wasn't trying to trade it perfectly because I wasn't at my computer, but I ended up just making, a couple grand just buying the dip into support and selling into the pop back up. And as you can see, this thing bounced all the way from 55 back to, 80, just a phenomenal bounce to take advantage of, almost easier than this first backside price action where it's almost a bit more straight up. So that was my thought process there. Pretty similar to GODLF, which was another one I was talking about, where this one started its uptrend from 170, got all the way up to the 270s, and was having its first red day here, made a double top and unwound. And this unwound right into close to 11 o'clock too, where this one's a little bit more straight down, but still you can see it had a choppy candle here. And I ended up just getting long into the support level from a couple days ago, just right here. Great level of support where it really consolidated. And we got the bounce from 2.3 all the way up to 2.6 and then into the 2.7. So great bounce here as well. And that's kind of a pattern I've gotten a lot more familiar with this year. It's just buying these panics when they're on their first red day, because I am primarily a short seller. So I'm usually covering into this weakness, and I usually can find when, okay, this is probably the bottom. I usually cover way too soon too. I'm probably covering, all along here. And if it keeps going down past my covers, I'm usually starting to watch it for a dip buy because it's most likely going to have a bounce because it's straight down. And now to talk about a couple losers on the month. Want to talk about Gmgi. Oops. So this was a stock that I had been watching for a while. It's been uptrending for a while, and this day it had a huge crash from $7 to $3, and I missed it. So I had some FOMO, and I wanted to short the bounce, right? So as you can see, it dumped here. But one thing that you need to notice is the volume that it dumped on was so minimal, right? This is hardly any shares being dumped. And that's something you need to watch out for, whether it's a NASDAQ or an OTC, is these promoters and these manipulators take advantage of dumping them on light volume to shake out longs, to get shorts involved. And this ended up having a big bounce. And since I missed the short, since I missed this collapse, I really wanted to short it, and it was a slower day. So I got short in the 550 somewhere here, and it was just so liquid. The fills were really hard, and then it ended up holding, and it was just absolutely gross. I ended up cutting some, and then re-adding up here, and then covering down here, and I just ended up losing like $1,000. Terrible trade. It was so liquid, and it was just a lot of FOMO. So one thing you really need to watch out for is those light volume sell-offs. And if you miss it, you miss it. And the bounces always come back way harder than you think. So I did a good job minimizing there. Something I don't really want to put myself in a position of again, just because it was super annoying and frustrating. And then another trade I want to talk about is CYDY. Which was my biggest long loss of the month on the 19th here. So if we look at a chart, this is the 19th right here where I'm going long. And for me, I was having a lot of FOMO because the stock had downtrended from 480 to 270. And for anyone that knows, CYDY is my baby, and I missed out on all this. So I was having a little FOMO to make some money on this volatility that I was creating. And I saw that it was coming into this massive support level of 3. And then this day, they released a PR and it was getting a small gap up. So let's dive into an intraday chart here. 20 days should be good for a 5 minute. So yeah, this was the day that created its low, and then this is the day that I went long. So it was slightly gapping up, and I thought that since it was gapping up on a press release that it was going to gap up and it was just going to have a big morning spike, and I was trying to load as many shares as I could possibly into the stock, and I ended up top ticking it with 14,000 shares from 15,000 shares from 315, and it just dumped. And I was in other trades at the open too, so I was trying to cut my loss here. And I didn't even get out of all my shares. I think I had still a few thousand left, and I just had to cut somewhere down here. But it just shows that I was trying to predict instead of reacting to the price action. Whereas if I just started in a couple thousand just to keep it on watch, and then added as it started taking out, the open price of 315, it didn't even break this resistance. Level. I just started buying. And, it did end up having its big bounce all the way to 390 eventually. And another thing to note, too, on this daily chart is CYDY takes its time to make moves, right? It takes its time to fade off. It takes its time to create a bottom and pop. CYDY, there's usually no rush because it takes its time on the daily chart to really develop its backside move or front side move. So just something to note there. That's basically all I got for you guys on this recap. Like, comment, and subscribe, and stay tuned for my September recap. I'm going to try to take the mindset I used this month in August and try to apply it to my September and just slow down on things because my last 3 trading days here haven't been too good. Small red day, break even-ish day, and then one decent green day. And there hasn't been too many opportunities. This is today, it's off. So I'm just going to get back to not expecting much, just wire together some weeks here where, maybe I can even take a day off and just trade smaller and then wait for that big week to come to me and not try to force it. So on that note, I will see you guys at the end of the month for my September recap.